Hey, it's Dave Harris here at Green Private Wealth, and I wanted to bring you an update from all the market noise this week, I guess, and what we've been doing here at Green Private Wealth, how we've been talking to our investment portfolio managers and amongst us as advisors, and how we've been talking to clients, just to bring you up to date on what we see happening and how we're addressing that, and why we're doing what we're doing with our portfolios. So as you know, we've had a huge announcement from the U.S. this week. Donald Trump set a massive tariff war going with his tariff program to, I guess, bring the trade balance back to the U.S. and bring back manufacturing and build back America better again, I guess. And so that's what his goal is. The pain that is inflicted on other countries is significant, and there's been a significant response to those tariffs that he announced after the close of business on the 2nd of April. So this has been difficult to digest. It's a moving, very fluid situation. I don't want to get into the specifics about tariffs because they are changing day by day or minute by minute. In Canada, however, the good news is that the USMCA agreement has been maintained, and that we will be subject to tariffs. You know, automobiles, for example, are going to have a significant impact. The ones that are made in Canada being shipped to the U.S., and some other things as well that we're going to have to deal with. So this isn't great for our economy, but we've been spared the worst of the tariffs that have been levied by the U.S. government. So that's a bit of good news there. The stock market has sold off sharply. It sold off sharply on the 3rd of April in response to the tariffs, and then it's selling off again today in response to China's counter tariffs on the U.S. And so there's a lot of noise out there, and we've had a lot of volatility. But to make sense of this, understand that we see these kinds of drawdowns quite often. In fact, I've got a chart that shows the current drawdown compared to historical drawdowns on the S&P 500. And so we've seen this before many times, and the markets always move back to new highs after these sell-offs. The cause of the sell-offs differ, but the response by investors is exactly the same. So you can think back to even as recent as 2022, when we had a high inflation and the central banks raised interest rates sharply in 2022 to offset that. The stock markets sold off. And really, this selling off of the stock markets is just a reflection of what investors think the future earnings potential of stocks are going to be relative to what they want to pay for them. So if you think the business environment is not going to be as good going forward, you don't want to hold on to, or you don't want to buy stocks at the current price. You want to pay less for them. And so the sell-off here represents clients just moving, or investors just moving out of the markets because they don't think stocks are going to be worth the same thing they are today in light of the tariff situation. Back in 2022, it was interest rates rising, thinking that companies couldn't make as much money, so the stock market sold off. You go back to 2008 when the credit crisis hit, and there was all kinds of subprime debt in the market that wasn't worth what they said it was worth on paper, and so the stock market sold off sharply. And so these are all different reasons, but the response is exactly the same: sharp sell-offs. Well, the other thing that's also true is that the markets have always moved on to new highs following these sell-offs. So we've never seen a situation where we've had a sharp market sell-off that the market hasn't at some point in the future gone on to new highs. But we have two really good things going for you here at Green Private Wealth. Number one is access to private securities. The private securities we're investing in private real estate, private credit. There are apartment buildings that people live in. These are loans on homes in Canada. We've got private equity. These asset classes are not correlated to the public stock market. So they're not seeing the volatility that we've seen today and yesterday in the markets. They're steady and predictable returns. We can look back to past crises, and we've had these in the portfolio since 2019. And so we had the 2020 pandemic when markets sold off sharply, the private securities held their value. We had the 2022 sell-off with rising interest rates, the portfolios held their value. And so we don't think that that will be any different this time around. And so this represents between 30 to 50% of our client portfolios. Those asset classes are holding steady and continue to hold their value today. The second thing we've got working in your favor is our Watermark private portfolio team. You have a full-time dedicated team looking at the market, doing research, looking at different investment alternatives, and trying to determine the best place to position various portfolios based on your risk level to get the best long-term return. In some cases, and in fact, in the past week, and even yesterday there were some trades made to help protect portfolios and look for opportunities as markets get cheaper. And we've been doing this as we've announced on our emails since last fall when Trump was elected. So this activity is ongoing. It happens every day, and we're always looking out for your best interest with the Watermark Private Portfolio team. It's important to understand that investing involves risk. We are never going to be able to protect clients 100% from stock market volatility because this is where you get the best long-term returns. What we do have, though, is an incredible, dedicated team always looking out to protect and grow your wealth. We continue to look forward to serving your needs, and if you have concerns about your portfolios, please reach out, talk to your advisor. We'd be really happy to talk to you and help you understand what's happening in your particular situation. Thank you, and have a great weekend.